Good morning, grade 9s. Today we're going to start with creditors. Creditors is the last chapter for the year that we're going to do. Now, the first thing that you should remember is, what is a creditor? A creditor is somebody who owes money to a other person or a business. The source document that we're going to use is an original invoice. And the journal that we're going to use is the Creditors Journal or the CJ. Good. Now remember, creditors is when I purchase on credit. So I owe somebody else or other business money. Let's look at the first example. When you credit purchases of an asset, purchase goods on credit and receive invoice 28. What are you purchasing? You are purchasing trading stock. Trading stock is an asset plus minus. How are you purchasing? You're purchasing on credit, which means the account is called Creditors Control. And Creditors Control is a liability minus plus. Trading stock will be debited. Creditors Control will be credited. Hurt because trading stock increases, but your debt also increases in Creditors Control. Let's look at your accounting equation. Your source document is an original invoice. The account debited is trading stock. The account credited is Creditors Control. So, because trading stock is an asset, it's plus 18,600. Look at the sign, it's a plus. And underneath Creditors Control, which is a liability, the sign is a plus 18,600 because it increases your debt. The same with the next transaction. When we buy a vehicle on credit, you receive an invoice. Your two accounts, what did you purchase? You bought a vehicle. Vehicles is an asset plus minus. And because you bought it on credit, your other account will be Creditors Control, which is a liability minus plus. Let's look at your accounting equation. Source document will be original invoice. Account debited, vehicles. Account credited, Creditors Control. Because vehicles is an asset, your assets will increase, and because you owe more, liabilities will increase. Okay, then when we look at the next page, what happens if you purchase an expense? Now, for example, you purchase stationery on credit for 540 Rand and you receive an invoice. Okay. What did you purchase? You purchased stationery. Now you'll remember that stationery is an expense and expense is plus minus. But an expense is also owner's equity, which is minus plus. Remember now, the more expenses you have, the less profit my owner will make, which makes him sad. That's why it will be a minus. Okay. And then because you purchased on credit, Creditors Control will increase on the credit side. Let's look at your source document. Original invoice. Account debited stationery. Account credited Creditors Control. Underneath owner's equity minus 540. Because what I've just said is, the more expenses you have, the less profit your owner makes. So it's a minus. Then you owe your creditor more. That is why liabilities increase. Now, what happens when our business pays our creditors? Good. First thing you'll know is that you will pay from the CPJ, and then your source document will be a check counterfoil. Let's look at the example. Pay creditor B Bell 950 per check. Good. Account debited. Your two accounts will be bank and creditors control. If you pay, your bank will decrease on the credit side, which also means your creditors control will decrease on the debit side because we owe less. Good. Now, source document will be check counted foil, account debited, creditors control, account credited bank. Underneath assets, minus 950 because you paid your creditor. And underneath liabilities, minus 950 because we owed them less. Good. Last part, the difference between cash purchases and credit purchases. Please remember that when it's cash purchases, you will pay them immediately. But with credit purchases, you will pay them later. Cash purchases will mean that your account will be bank, and credit purchases will mean your account will be creditors control. Good, I'll send you your homework later on.